Hello everyone! On the occasions of the group exercise to get the bonus point, I would like to present to you a very interesting topic, which is the margin trading in Vietnam. But first, let me introduce my team. My team has team members, me, Nguyễn, Trần, Trâm, and Phạm, and Tuyết is the remaining member. So first of all, we must understand what is the margin trading. The margin trading refers to the practice of using borrowed funds from a broker to trade a financial asset which forms the collateral for the loan from the broker. And the margin trading includes two positions. The long position, which we can call the buying on margin, and the short position, or we can call it short sale. However, currently, Vietnam's stock market has not yet recognized this form of trading. The margin trading on the security trading system in Vietnam, according to the Article 9 of the Circular 120/2020, are as follows. Before the investor conducts the margin trading, he or she must enter into a margin trading contract with the security company licensed to grant loans for purchase of securities as prescribed by the law in Vietnam. The margin trading contract is also the contract for loans on the margin trading account, and the margin trading contract must contain at least information about the collateral for the margin trading, the duration of making additional margin, the settlement of collateral for margin trading in case of the investor's failure to make additional margin, the methods for settling disputes, specified risk and damage that may occur, and the cost to be paid by the customer. The foreign investor are not allowed to conduct the margin trading, and at each security company where the investor opened his or her security trading account, the investor is only allowed to one margin trading account. The margin trading account is a separate account or separately managed or recorded as a sub-account of the investor's existing security trading account. The security company must record the margin trading account of an investor separately from the securities trading account of that investor and separately from the margin trading accounts and security trading account of other investors. The marginable securities are share of fund certificates that have been listed or registered on security trading system and have fulfilled the basic criteria concerning the listing time, trading registration, the minimum capital and financial performance of the issuer, liquidity and price fluctuation, and transparency of information and other criteria set by the SSE. For the today background, according to the DSC Securities Research Group, the entire market outstanding debt currently reaches 150,000 billion Vietnam dong. This is not the highest number ever because there was a time when it reached 200,000 billion. However, what DSC experts are concerned about is that if we consider in terms of the leverage ratio, then the margin debt divided by the host market capitalization has exceeded 3.2% and is the highest rate level in history. In terms of scale, the market leader at the end of the second quarter is still the mirror asset Vietnam Security, with loans of more than 15,000 billion, of which margin trading account contract accounted for 13,502 billion, an increase of nearly 7%. Next is SSI Security, with the margin lending activity of 13,104 billion, an increase of 20%. The VPS, TCBS, BN Direct, KIS, and Vietcap are also the company that have a large outstanding margin balance in Vietnam. For the margin trading policy, currently, normally the maximum term for one loan is 3 months, and the normal interest rate will fluctuate between 13.5 to 13.8% a year, and it can change from time to time. When you overdue the loan, the interest rate will be equal 150% of the normal loan interest rate, and the service maintenance fee is usually free. According to the regulations of the State Security Commission, the minimum initial margin ratio is 50%, and the minimum maintenance margin ratio of the security company are usually equal or larger than 35%. The margin call ratio usually will be equal or larger than 30%, and the loan to value ratio is 10% to 50%. For the loan limit, for general customer, you can loan from 1 billion to 10 billion. And for the special customer, it can be up to 70 billion. In addition, some company will have other separate policy. For example, the SSI Security company will have separate policy for each separate stock code, or the Myriad Asset Security has interest rate lower than most of other security company, which only account for about 13% annually.
Hello everyone, so now I will move to my part. According to assessment from securities company and experts, falling interest rates are an important factor promoting the financial services industry, including securities. And many investors have transferred capital from banking channels to other investment channels. But stocks are the most attractive, and at the same time, margin lending interest rate also decrease, and this will stimulate loan demand to increase investment. A report from VN Direct Security Company said that by the end of the second quarter of 2023, the amount of margin loans at securities company was at 140,000 billion Vietnam dong. The ratio of industry margin loans to the total value of its assets in the last 3 years have usually been around 17 to 20%, and the analyst team expect that the total market margin loans to reach 155,000 to 180 billion Vietnam dong in the second half of 2023, an increase of 10 to 30% compared to the end of the second quarter of 2023, with the total equity of 30 companies reached nearly 183,000 billion Vietnam dong at the end of the second quarter of 2023. These figures show that the margin loan to equity ratio of the entire industry will be about 0.85 to 1 times. And next, I will give you some margin program of some securities company in Vietnam. First is the SSI. Since the beginning of the year, SBV has reduced interest rate 4 times, and it will support the and SBV reduced interest rate 4 times to support the recovery of economic growth, leading to security types that are also racing to reduce margin lending interest rate for the customer. And from the 1st September to the 30th November, SSI Securities Company announced the development of the program, margin interest refund and M9 margin power. The more you borrow, the more left the interest rate, and accordingly, the applicable market margin loan interest rate is from 9 to 11% per year for the customer with an average monthly outstanding balance of 3 billion Vietnam dong or more. Besides, SSI still applies the policy refunding interest rate up to 30%, and specifically, customers with an average outstanding debt from 100 million Vietnam dong to less than 500 million Vietnam dong in a month will receive a refund of 300,000 Vietnam dong, and the average balance from 500 million Vietnam dong to less than 1 billion Vietnam dong will receive an interest refund of 500,000 Vietnam dong. And according to the solution of the environmental staff, for example, customers using a deposit value from 30 million Vietnam dong to 499 million Vietnam dong will receive maximum refund of 300,000 Vietnam dong. Lowest compatible interest rate is 9.25 to 9.29%, while SSI current lending interest rate is 13.5%. And besides that, there are some special margin program of other company. There are many programs to encourage margin lending activities because outstanding balance is still large. Techcombank Security Company, or we call it TCBS, on the 1st September also announced a change in margin loan interest rate applicable to all ordinary customers. Accordingly, the T3 flexible loan package has an interest rate of 3% per year for the first 3 days, and then 80.25% per year, equivalent to 0.05% per day. And for the flexible loan package T5, the interest rate is just 10% per year. And previously, TCBS also reduced the general margin lending interest rate from 13.7% per year to 12.99% per year. And the company also offers a promotional program, preferential loans, grateful interest, with an interest rate of only 9.9% per year from the beginning of August and lasting until the 6th October. Meanwhile, ACBS Security Company also applies an interest-free 7-day margin program. After this period, the customers will have to pay loan interest at 15% per year. And for the T14 margin program, in the first 14 days, customers only paid 8% interest per year, and from the 15th onwards, an interest rate of 15% per year applies. And that's the end of our topic. Thank you for listening.